Hey, it's Sasha Evdokov, and in this video, I want to discuss with you the pattern day trade rule. Now, it's important to understand this rule if you have less than $25,000 in your bank account or trading account and you are an active trader. So I'm trying to make this video as easy as possible and simple to understand, and what this rule is really all about is to protect the beginner traders. Now, do I think it's a great rule? No, not necessarily, and I'll tell you why in a minute. But basically what this rule states is if you're an active trader and you make 4 or more day trades in a 5-day period, then you will be stuck in your position. Pretty much you won't be able to trade anymore. And that's the problem with this rule, and that's what you have to watch out for. So if, for example, you're making 1 or 2 trades on Monday, another one on Tuesday, and another one on Wednesday, your Wednesday position, you might be able to enter it, but you might not be able to get out of it. And now if the stock is tanking lower and you're trying to sell it, you can't sell it because you are stuck in this pattern day trade rule. It's a law and you won't be able to get out. Even if you try and call your broker, you try and call them up and say, I need to get out of this right now, you won't be able to. They won't be able to help you because they are bound by these regulations by the SEC. Now, I think this rule can be a problem because if you're entering a position, let's say 100 shares, and then you're selling 20 on Tuesday, you're selling another 20 on Wednesday, and another 20 on Thursday, you might be stuck in your last set of positions because you've already executed 4 trades, or you might not be able to enter new positions if you spot something good. So that's the problem with the pattern day trade rule, and you have to be aware of it if you have less than $25,000 in your account and you're an active trader trading 4 or 5 times per week. So be really careful and cautious when trading, because otherwise you might get stuck in a position you don't want to be in and the stock is tanking, and that's not a place you want to be in because nobody can help you. Now, one way to avoid this or to kind of help get away from this or trade more frequently if you want to is to set up 2 or 3 brokerage accounts. So let's just say you have $20,000 in your total trading that you want to do, or $21,000. What you can do is set up one account at one brokerage firm like a Scott Trade or Trade King or something like that. A second account at Option House or Trade Monster or wherever you want to go, and the third account at TD Ameritrade or somewhere else. Now, you'll be able to get 4 trades from every single place, 4 or less trades. So that'll give you about 12 trades total, but you have to kind of manage those individually in each account or each segment. So that's kind of the issue behind it, is you'd have to split your money up and manage multiple areas and logins with multiple trade systems. But you can trade more frequently, and that's just a way to do it and what most people tend to do if they want to trade more actively. But if you have less than $25,000 in your account, you won't be able to really trade frequently due to this pattern day trade rule. So be aware of this and be cautious, especially if you have less than $25,000. Now, when you have more than $25,000 in your account and you're trading actively, what happens is you get flagged as a pattern day trader, and there's nothing bad about that. You just get flagged that you're more of an active trader. Your margin requirements might be slightly higher when you're entering positions, just because they might think you're doing more risky things, but it's nothing really to be worried about. But you might get a little thing on your name that says pattern day trade rule. It's kind of like a badge if you want, but it's nothing really critical or to worry about. But if your account drops below $25,000, so let's say you had $26,000 and then it drops to $24,000, then all of a sudden you'll be bound again by the pattern day trade rule. So be aware of this rule. It was created by the SEC to protect novice and beginning traders. Do I think it's great? No, not necessarily. Like I said, if you're scaling, it's not the best rule, but it's out there. You have to be aware of it, and if you're stuck in the trade, you're stuck in the trade. Nobody can help you out until you wait a few days to get things cleared from your earlier trades. Thanks for watching, and if you're interested in taking your trading to that next level and you want to learn deeper and faster, then go ahead and check out some of my courses at tradersfly.com. And if you'd like to see exactly the stocks that I'm watching and get in-depth videos on the current market conditions, then go ahead and sign up to my daily news recap mailing list, and I'm going to send you exactly every week what's happening in the markets, the stocks that I'm watching, and the stocks that are looking to break out higher and faster. Thanks again, and remember to do what you love, contribute to others, and most importantly, live life abundantly. See you next time.